for being here, taking time out of your day for this presentation. We're glad to be here. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest, and I am joined here with three of my most esteemed colleagues, starting with Steve Chappell, Todd Schaefer, and Patrick France. They will introduce themselves before they opine. That's a good word, right, Todd? Before they opine about the stock picks that they will get into as well. So, you're here. What is the software we're talking about? If you're new, we're talking about VectorVest. VectorVest is a stock analysis and portfolio management system. It's one of the best softwares out there to help you to analyze stocks in every degree available to you. We're going to help you to know when to buy, what to buy, and when to sell. Keeping all of that in mind, you also need to know what your stocks are, if they're safe, if they're undervalued, if they're rising in price, or if it's the right time to even buy. So VectorVest takes all of that information and we streamline it into something that is very usable from the standpoint of any investor in the market, whether you're an aggressive trader, you're a prudent investor, you're a long-term investor, and many of you may even be speculative traders. With that, you have the opportunity to use the software no matter what type of investor you are. And we time the market. We have a timing signal for every type of investor as well. So you can look at us pretty much as a one-stop source for your analyzation of all stocks. Did I say that right? Analyzation?
Questionable.
Questionable. Well,
could be a Glenism.
Well, it could be a Glenism. So many of you will be introduced to some Glenisms along the way, and that is what we do. So that's what VectorVest is all about. This hot stocks panels, this is the fourth panel that we've done. It looks like we're doing them once a month now. And the hot stock panel uses instructors, high class, high value instructors within the VectorVest software. I put you all on the pedestal. Do not fail me now.
Just been promoted.
Yes, do not fail me now. All right, so put a lot of pressure on these folks, but you know something? They really know what they're talking about. They've all been here in excess of 10 years. Even you? Not quite?
9.
Okay, that's close. All right, so in excess of 10 years or more, and if we average it all in, then average in Patrick at least 10 years. So we use the curve on that. We use the bell curve.
All right, I'm cool with that.
A lot of knowledge here, a lot of information, a lot of personal feedback that you'll hear. So that's the importance of the panel. We all will use the VectorVest software to analyze stocks. And somewhere along the line, in the end, towards the end of this presentation, we're going to take stocks from you guys. All right, with that, we're going to start with the picks of the panel. And I'm hosting, and guess what? I get to go first. So we're going to go to the graphs tab in the software. And my first pick of the hot stock panel, also remember, is known as Hottober. Keep that in mind, Hottober. All right, first stock, D.H. Horton, DHI or D.R. Horton. It's in the building residential commercial. And if you are a subscriber to, the software, you see that, Patrick?
I see that.
Okay. You'll know that at any given time, you can look at our industry's viewer and see what the hottest industry is, no matter what's going on in the market. So I love simplicity. I took the simplicity of looking at some of the hottest industries. Building residential commercial has been on fire, en fuego, for the last month. All right, so DHI, here's the stock shown in candlesticks. I also have support and resistance. DHI also traded in a little bit of a channel after moving up prior in the early month or so of the last 3 months. This is a 3-month graph. And then it broke out of that level of resistance, which was sitting at about a number that I can't read. It broke above that level of resistance. How about that? And once it did, it went up nicely, tested that level of now prior resistance as a level of support. And what did it do? It bounced up again, hit a new 3-month high. Today's activity shows a green candle, but it is a closed green candle, which means the price started at the top of the candle and pulled back today. Now, even with the pullback of price today, it is still higher than yesterday's close, and the close price yesterday was $52.92. We're sitting 1 cent higher than that. Now, if we break above yesterday's close of $52.92, we're right smack dab at it. If it goes to $52.91, this will automatically become a red candle. Now, because the candle is closed, a little bit of give back today is probably not the right day to buy it, but I do like things like the earnings per share rising over the last 3 months. I also like that the stock utilizing a 20-day exponential moving average, which is denoted by this purple line, has served as a beautiful trend line, and all throughout the 3 months has done a good job supporting the stock's continual upside move. So I'd like that the stock hit a new high yesterday. It didn't confirm and move higher today, but still in a nice 45-degree angle. Volume is pretty steady. Earnings per share looks good, and the stock loved that it broke out of the channel and went up. Even with that test, pulled back down and went up some more. So that is my first pick, and now I'm going to ask for comments from my esteemed colleagues to see if they have any more they want to add. No? Great. We'll move. Oh, okay. No, okay. Let's start with you, Steve. What do you think?
Well, since I also picked a home builder, I think you're fishing down the right rabbit hole.
Okay. I don't usually fish for rabbits, but...
Well, you're trying to pull the rabbit out of the hat then.
Okay, there you go.
Yeah, the sector is doing well. When I was looking at the Midas Touch list, there are a lot of builders on that list. So the sector itself is doing well. Mm-hmm. And it's trending nicely, so right on.
I mean, it looks good. Only thing, a little bit of a tall wick yesterday, but volume really doesn't give any confirmation that. Volume's light today, so yeah, uptrend still remains pretty good.
Maybe you want to give them some insight on when to buy.
All right, so when to buy. How about looking at making sure that the stock's price goes a little higher than the high? Being that it's a $52 stock, $53 stock, I would say put in a buy stop order about 12 cents higher than that 3-month high as a means to get in. That helps to ensure that you're buying still into a rising equity. And if you bought it like right now, who's to say that that level of the high won't serve as a good resistance and the stock's price pulls back? Make sure you're always buying into rising stocks, but you also want a rising market. Keep that in the back of your mind as well. But right now, I would prefer for us to be in a rising stock. When you buy into it, 12 cents higher than the most recent high should be a good level to get in. Now, as far as getting out, why not use that 20-day exponential moving average? If it's serving as a beautiful support line, if you get into this stock and it breaks below that 20-day exponential moving average, may be a great opportunity to pull the trigger, take either profits or mitigate loss. All right? Let's go to the next stock, which is also in the home builders, which is Pulte Homes, PHM. Sort of kind of the same scenario. Let's put this on a 3-month graph as well. Look at that beautiful equity curve. All right, stock is steadily moving higher. It was under the 20-day exponential moving average early in the 3-month time period, but once it broke above that 20-day and broke above that nice level of resistance, sitting at that number that I can't read as well. But look at that breakout. This is why we look at support and resistance. Breakout above resistance, look at that. It never looked back. The 20-day exponential moving average also serving as a good level of support. The stock hit a new high about 3 days ago. Again, the same kind of scenario. It's a beautiful stock for a hot stock in Hottober, and I really would like to see it break above that level of resistance or that level of the high, which would be about 12 cents higher than that level. Volume, watch volume a little bit, pulling back a little bit, but overall pretty steady. Look at that earnings. Earnings jumped up back in August, and it's been flat, but still positive earnings sitting at $3.64. So another good stock from that perspective. Love the 20-day exponential moving average. And every time it pulls back to that level of the 20, it tends to kiss a little bit, just like Prince. It kisses, and then it runs back up again, kisses, runs back up again, and right now moving a tad bit sideways. Look to see about 12 cents higher than the high. Any input?
I was going to say, it's just another example. You know, this market's been volatile and down, and here we've got a couple stocks that have been persistent through that craziness, and it's a very focused market, right? There aren't a lot of stocks, let alone broader industries and sectors, that have persistent uptrends. So okay, if we're rotating out of these high momentum stocks into something more consistent, right, I'm okay with that, particularly as the market tries to figure out what it wants to do next.
I like the idea of, even with the volatility in the market, those two have been steadily moving higher. Normally, the market's trend affects 80% of the stocks in the market. These are a couple of outliers based on the strongnosity of the industry. That's a Glenism.
If I can vamp a little bit here off of, we had a comment by Joff99 XX. Looks like, why not say software desktop or shippos? Those are hot industries as well. I want to show you something on the shipping companies. If we go to, let's go to the home page here real quick, Glenn. And where's their industries? Over
Right
there.
here.
There you go.
Building.
So go to transportation.
Transportation.
Yeah. Right click and view the industry graph there. I showed this in the Jockey Club this morning, and I think it's kind of telltale on what these companies are going through right now. If you give me it's a 1 year?
Yes.
Perfect. So this is the transportation shipping industry. So it represents the 12 or so, about a baker's dozen at least, companies, TK, Scorpio, the whole gamut. And what they're running up against, what I see, is they're getting towards those high watermarks that they've been hitting throughout the year from time to time. These shippers are very, very volatile. And while they have truly been one of the best places to be in the stock market for the last 4 or 5 days, I would be careful with the shippers for the moment. Now, if they can begin to eclipse those watermarks there, and you can see the earnings per share on the shippers on the bottom, they could really come to life in a big way and truly still be one of the very bright spots in the market. But not until they can overcome some of those peaks do I think I want to go and play with the shippers at this stage.
Yeah, they stumbled today, but they have been a great story.
Yeah.
I ran across that same phenomenon in the data by looking at the RT deltas over the past 10 days.
Right.
And shippers are just, the transport sector is just blowing everybody else out of the water.
And guess what? The shippers will do that. They will run when they run. And look at these opportunities. When they run for a couple of weeks. When they fall,
And they
fall hard.
And they run strong.
And again, right here, they run, and then they fell. This fall wasn't nearly as deep as that fall, but where are we right again? And if history repeats itself time and time again, yes, Joff, I understand the shippers are running, and Steve brought up that good point. Look at where they are right now, and each time that's happened, what have they done? They've fallen hard. So good point.
Now again,
If it can break above,
with a
though.
break above, then I really think that in a bigger way, maybe even some institutional buying could resume, something like that, if they can break through those high watermarks.
And look at that, it's got some room to run.
Also-
After it breaks above, it's got some room to run, at least up to the 1 year high of about $13.
Keep an eye on it though, because every time we've come up to that resistance,
That's what I
look
mean.
at what volume's done. It's never really been any conviction behind that. There's been a lot of people piling into it on this most recent run.
Very true.
Yep.
Anybody want to take bets if we see dry ships start to show up in the Jockey Club?
Dry ships is
in the
not
next
in
2
business
weeks?
anymore.
Out of the database,
Yeah,
but
dry ships is no longer there. But there's a lot of other shippers.
the one to watch out for is
TNK?
is the little one, TNK.
Yeah,
Yeah.
TNK.
TK
Yep.
shipping, yeah.
TNK, yeah.
Is it TNK?
Well, that's the symbol,
Yeah.
TNK.
Okay. But
be
Joff,
fun,
good
though.
point. Good point. But I like what Patrick said, that even as it's approaching this level of resistance again, this is the time where more people are more involved in it. So between Steve bringing up this graph and Patrick's input on it, it is still something to watch.
It's
but
something to watch.
but just see if it can break through that level of resistance.
Absolutely.
All right. Let me close out of that. Let's go back to the graphs. Did we talk about Pulte already?
You did, I think.
Okay, then let's keep on moving. And my last one is IMPUY. Now this is a pink sheet. All right, it's a pink sheet, but it's in mining other, looking at platinum. So I did some research on this stock before I picked it. IMPUY is a South African platinum mine. And what they did is recently, within the last couple of days, they bought North American Platinum, which is a Canadian-based company. This is the first time that they've bought outside of Africa as far as a mine. All right, and They are extremely confident about platinum continuing to rise. Look at the earnings per share on this company. It is a lower dollar stock. It is gappy at times, but even with the gappiness, the 20-day moving average, even on this lower dollar stock, is holding it. Look at that. And normally on a lower dollar stock, moving averages like 20 tend to not work nearly as well. So the company seems to be doing the right things, expanding now outside of Africa, outside of South Africa, and very confident on the platinum industry moving up nicely. Earnings per share for the company is moving up. And from a hot stock perspective, as a lower dollar stock, it's hard to find low dollar stocks that have this kind of an equity curve. Broke out of a level of resistance, tested it, and bounced back off. This is why we look at support and resistance on a graph. And again, the volume, though, does make me a little nervous. When they spike, we get to the little tall trees of volume, but other days we don't get it. So that is something to keep in mind. Good opportunity, in this case, at a $6, $7 stock, 5 cents higher than the high. If the stock decides to pull back, you have a good level of support with this 20-day exponential moving average. So wait 5 cents higher than the high. Make sure you're buying into a rising stock in a rising market. Steve?
Looks great to me. It really does.
Okay.
Just eyeballing it, the volume looks like we're under accumulation, right? And you're accelerating into the current price, so I'm loving all that.
Yep.
Obviously, I'd like to see the closing high be the new high too, but we're in the right track.
Mm-hmm. Patrick?
One thing that scares me is how much it jumps. Just like with some ETFs that you see that just gap up big one day, gap down big the next day. Anytime I see that, I tend to stay away from those, but hey, different strokes for different folks.
But I'm going to take that. Do you notice that the majority of the gaps are to the upside more so than to the downside?
But if it starts reversing trend, those gaps are going to go against you, and I don't want to have to worry about that headache.
Well, and if that's the case, that's why you have a plan in place to know when to get out. Mm-hmm. I like that 20-day exponential moving average, or even look at another level of support or resistance.
You get the new high, that prior pivot is fine.
And that's, you talk about right here or here?
The pullback, the last swing low.
Here?
2 bars ago.
Oh, right here.
Yeah.
There you go. So now that headache goes away that Patrick would have because it gets you out a little quicker. All right, but a lower dollar stock is going to be a little bit more volatile, but man, I like the levels. So
to Patrick's point, it could gap hard against you the next day and sting you, but
yeah, look at like the day that it gapped down to support right around the beginning of September. Yeah. Go for it a little bit.
Here?
Yeah. I don't want to be waking up the next day or at work and all of a sudden look at my portfolio and see the stock gap down 50 cents a share on a $6 stock.
And then what do? You sit there and
then your order doesn't get filled. Then all of a sudden you miss it. Then you have to rush in and
so then this is where discipline comes in. If you say I've got a level of resistance, current level of support, give it a little bit more room. It is a lower dollar stock. It's a little bit more volatile. How about that level? That discipline pays off. It bounced. Would you still been a happy individual? You would have gotten nervous here. You still would have had a plan to get out. The plan saved you and kept you in. And I think that happens a lot. I think a lot of people, when you do get into a lower dollar stock, you see that happen and you panic. Stop panicking. That's why you have a plan. The plan says, well, I got a level of support now. Let's see what happens. Stick to the plan. And again, a lot of people that think that way, these things happen over and over again. So
here's your other choice, right? So to Patrick's point, if you're concerned about that, right? So what do? Maybe I play the 20 instead of that pivot.
And it still helps.
Take a smaller position.
But why would you have chosen a 20 at that point? Because before that, I mean, it was holding a little bit, but it wasn't really as consistent as what we've seen with the other trend lines so far.
So then why would I put the 20? It broke above resistance. And it was above the 20. I got two opportunities of why I want to stay in.
You could look at more. The other mitigating factor here is that earnings performance.
Yeah.
Right?
Yep. There you go. So I like the pushback, even though it was horrible. I like the pushback.
Well, we like to push back. Glenn,
well, I know you do, but my picks are going to be the best, and that's the way. I'm the host. That's the way that happens. All right. Now,
So short this stock tomorrow?
Is it not? All right. So those are my 3 picks and why I picked them. And again, when these videos come out, if you like the picks, please comment on the videos. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.